If you guys have any questions, please feel free to put the questions in the chat or in the Q&A box, either one. And if you're not comfortable with either one of those options, feel free to wait until the very end of the session to ask your questions, and I will promote everybody to have the ability to talk, and you guys can have more of a free conversation. And during that time period, I will shut off the recording. And so if you aren't comfortable with your question being on the recording, you're more than welcome to wait until that period of time. Um, and I just really wanted to thank you guys again for joining us. My name is Harley Moore Wilson. I am a member of the Native Agricultural Financial Services team. We are a Native lending institution specifically focused around agriculture. And we are here today helping a little bit of agricultural risk management and understanding farm loans. Our presenter today is Mr. Calvin Greer. Calvin earned his bachelor's in agricultural business from Texas A&M University in 2010. Over the past 15 years, he has served the Farm Service Agency in a range of operational and program-focused roles, including a loan officer, a farm loan specialist, and environmental coordinator. His experience spans field, state, and national program work, giving him a comprehensive understanding of FSA's mission and needs of producers. Since 2024, Calvin has served as a senior loan officer in the loan making division at the national office, where he provides policy support, program guidance, and technical expertise to field staff nationwide. He is committed to advancing FSA's service delivery and strengthening access to credit for agricultural producers. And so with that, I'm going to go ahead and turn it over to you, Calvin. Thank you.
Thank you, Harley. I appreciate it. And hello to everyone on the call today. I did also want to just introduce two of my colleagues that are joining on the call today as well. That being Heather Lubenthal, who's the acting branch chief of the Guarantee Loan Making branch and the loan making division of the national office. And then also joining on the call today is Kim Eilerman, who is the director of the loan making division in the national office. And so just wanted to highlight them as the colleagues that are FSA representatives on the call as well. And just want to say thank you to you, Harley, and Native Ag Financial Services for giving us the opportunity to share information about our programs today. We hope the information that we share gives you a clear, more confident understanding of our loan programs and the application process. And so with that, I'll start the presentation. Before we dive into the details, I just wanted to give a quick overview of what we'll cover today. We'll start with taking a broad look at FSA farm loan programs and what they're designed to do and who they support. We'll walk through the core eligibility requirements that apply across all loan types so that there's a good understanding of the baseline criteria that applicants must meet. We'll also go into the various loan types and purposes and how each of those can be used within a farming operation. After that, we'll outline the steps involved in submitting a complete application, which includes the documentation and the timelines and what to expect in that process. And finally, and lastly, we'll look at the tools available to help applicants prepare, such as the loan assistance tool and the new online application platform so that producers can navigate the process more confidently. So let's talk about the program objectives. Major objective of what we do is to provide financing that allows producers, especially those early in their operation, to move toward owning and successfully operating a family farm. One of the things that we coin ourselves as a lender of first opportunity for those who can't meet the requirements of commercial lenders. And so that's what we mean by credit elsewhere, unable to obtain credit elsewhere. That's when we step in to access the conventional credit when it's not available. That's where we step in, and FSA can be that supportive financial assistance. We also, one of the missions of FSA is to help farmers return to normal operations after uh, a disaster has occurred. That includes restoring production capacity, replacing lost assets, and stabilizing cash flow. And then finally, our ultimate goal is to help borrowers transition to commercial credit, which we refer to as graduation. This is our long-term goal to help producers build the financial strength and experience and stability needed to eventually graduate to commercial lending without FSA assistance. So here you see basically two of the main programs that applicants can request loan assistance for and what we have to offer. Um, the first being direct loans, which are that's funding straight from FSA provided to the producer, which is aimed at helping farmers either start, purchase, or expand their farming operation. These loans offer additional support as well to help producers maintain profitable operations, especially those that are new or lacking financial backing when they're not able to get that commercial conventional credit. On the flip side of that, we have the guaranteed loan program, which is designed for farmers who may not fully meet commercial lending requirements, but are close. These loans are actually made and serviced by that commercial lender that's participating in our program, not FSA. So what FSA's role is to approve the eligible guarantee and provide oversight. And with that guarantee, it helps the lender reduce their risk to financial exposure, which also enables them to provide more opportunities to producers who might not qualify without that guarantee being in place. Excuse me. And so let's also talk about the general eligibility requirements that are applicable to pretty much every one of our loan types. These requirements ensure the FSA is supporting producers who are truly need the assistance and who have the capacity to successfully manage a farm operation. The first eligibility requirement you see here is the unable to obtain commercial credit, which was referenced earlier at reasonable rates and terms. This is a key requirement that applicants must first be unable to get that financial assistance from a commercial lender, and that's when FSA steps in to fill that gap. We also refer to that as test for credit. Another eligibility requirement is acceptable credit history. Now, with credit history, it doesn't mean that an applicant needs to have perfect credit history, but they must demonstrate that they have a history of meeting financial obligations or at least provide an acceptable explanation if they've had credit issues in the past. For example, if an applicant maybe went through a time or struggle where they had medical issues and they weren't able to pay things timely, when they apply, a loan official they're working with or reviewing their application may ask about what was going on at that time frame to at least uh, see if there was a element that was out of their control of why that credit history had that hiccup at that time. And so one thing I want to highlight there is just making sure that if an applicant has had, those instances, not to think that they're out of the running of being eligible. It's just a conversation they need to have with their loan official or the FSA office. Another area of eligibility is uh, someone that's received federal debt forgiveness in the past may be ineligible depending on the specific loan type. Uh, Also, not being delinquent on federal debt is another eligibility requirement that's important. An example of that would be something like a student loan. If it's delinquent, that they might want to be aware of that. That could hinder them from receiving financial assistance. And although there may be some delinquency on the federal debt, one thing that we internally would have to note is there the ability to cure that federal debt delinquency um, either throughout the application process or prior to loan closing. So that may be something our loan official would ask or inquire about, and not just rule out that that person is not eligible. So there's a little bit more work on our end to do some investigation on that delinquency. And then we also evaluate whether the applicant has the experience and managerial ability needed to operate a successful farm. And we'll get into that in a later slide further in the presentation, is specifically on the FSA 2001 application. Uh, the next thing, as far as the family farm size operation eligibility requirement, operations that we're financing have to meet the family farm definition. And there's a couple things that go into that, but mainly we're trying not to finance large corporate farming operation. And this can vary depending on where you're at geographically. For example, a family-sized farm in Texas may not be a family-sized farm in Nebraska. So there's some consideration on where that farm operation is located and what's typical for that area as far as size. Applicants also must be the operator of the farm after the loan is closed, meaning they're actively engaged in the day-to-day management of that farm operation. And then lastly, they must be a U.S. citizen, non-citizen national, or a qualified alien, which will also be self-certified on the FSA 2001 application and confirmed by the FSA staff. Another eligibility requirement is beginning farmer eligibility. To qualify as a beginning farmer, what that means is the applicant must not have operated a farm for more than 10 years. This helps ensure that, we're providing access to this targeted support for beginning farmers who are applicants that meet that criterion. Beginning farmer also cannot own a farm larger than 30% of the average farm size for the county they're operating in. That requirement is specific to the farm ownership loan, which we'll break down later. Um, that 30% threshold, they could still be eligible if they exceed it, but they're only needing operating loan purposes. So that's one thing to be mindful of. I know that could sometimes be confusing, and people think they're not eligible for a loan. So that's another area that you would want to have that conversation, and us internally as loan officials should be aware of. For an entity to be considered a beginning farmer, all members of that entity must be related by blood or marriage, and then they would individually need to meet the beginning farmer requirements. And then finally, they must substantially participate in the operation as well, as far as the managerial uh, ability and their contributions labor-wise. On this slide here, just wanted to give you a general overview of the types of farm ownership and operating loan assistance, which will break down each of these more in depth, but just kind of give you an idea of the different loans within each program. As you can see, the direct loans has a little bit more to offer as opposed to the guaranteed side of things. And so we'll talk about that here in a minute. But before we get into that, let's discuss the different uses of each of the different type of loans. This slide really helps set the expectation on what FSA funds can and cannot be used for, because that becomes when we're talking about the application process, knowing that ahead of time when you're applying becomes extremely important, and can alleviate a lot of frustration if you know what our regularly we can finance and or cannot finance. So farm ownership funds can be used to purchase farmland, construct or repair buildings, and complete soil and water conservation projects. Refinancing of debt is allowed with FOs, but is unique to the guaranteed program only. So with the direct, we can't refinance debt with the FO. For term operating loans, those can that loan program can be used to purchase livestock, machinery, equipment, fixtures needed for the operation, and also be used to refinance debt under specific conditions, mainly that it has to be for another purpose, ag purpose, that's also authorized within these sections. Annual operating loans, these are funds that are used to help cover essential operating expenses for the production cycle. They can also be used for feeder and livestock, scheduled and principal and interest payments on term debt. and also livestock replacement. One thing I want to highlight here with any purpose, or if someone's coming to apply, if there's ever any uncertainty about whether something is eligible, I just highly suggest that the applicant contact their local FSA office for clarification because we do run into instances where um, applicants may apply for something that's non-eligible or what we consider a non-eligible enterprise. An example of that would be something like ag tourism or a hunting ranch, where not a commodity, no ag commodities necessarily being produced, but they might be ag in nature or associated with ag. So those are the scenarios we want to be mindful of the use of what we can and cannot do. Okay, let's dive a little bit more into the specific loan types. First, at the basic level, we'll talk about youth loans, and youth loans are available within the direct loan program and are capped at a maximum of 10,000 and can be repaid over a term of 7 years. This program gives young borrowers time to complete and learn from the ag-related projects that they're participating in, whether that be 4-H, FFA, tribal youth organizations, or something similar to that in nature. One thing about this program is limited to youth that are 10 years old to 20 years old, and they also require an advisor. That could be a ag teacher, a 4-H leader, FFA advisor, or another approved mentor. One thing about this program too, several years ago, it was capped at 5,000, but it recently increased from in 2024 from 5,000 to 10,000 to give a little bit more capital. As we know, costs have increased over the years, and so 5,000 was not enough to help fund a lot of these projects. Annual operating loans help producers cover the cost of the yearly production cycle. Repayment is typically within 12 months, but can be extended up to 24 months. These are capped at $400,000. There are situations where a longer term is possible, but those are generally unique to operations that are establishing a perennial crop or take a little bit longer, or if an operation is recovering from disaster. One thing I want to note about the interest rates, those are set monthly, but once the loan is approved or closed, um, those are fixed for the life of a loan. And that not only applies to the annual operating loans, but all of our loans. Shifting from annual to term, this type of loan helps provide longer lasting financing um, for purchasing livestock or equipment, the uses that we covered earlier. And the terms on these type of loans range from 1 to 7 years, depending on the purpose and the useful life of the assets being financed. The maximum term on this too is also $400,000. I know it's not on the slide, but it was on the previous slide as an operating loan, and that's $400,000 as well. For farm ownership, which we refer to as FOs, these can be used to purchase farm real estate and improvements, including trust land. And as we mentioned, you can't refinance debt with this unless it's a guarantee. The thing as far as the term on these that makes it different from the operating loans, these can go up to 40 years, providing a little bit more repayment flexibility, and these are limited. The maximum you can receive on the direct side is $600,000. Oh, sorry. One thing I did want to highlight on this slide is a loan-specific eligibility requirement. Basically, for this one in particular, applicants must have, they need 3 years of farm management or operational experience within the last 10 years. And so we'll navigate and show you that on the 2001 of where that can be documented to address. For entity applicants, the same requirement applies, but it is if you have an entity with multiple members, at least one of those members have to have been participating in the business operation of a farm or ranch for at least 3 out of the past 10 years. And I will say that this requirement is one of the ones that most applicants, if they're brand new to FSA, are not familiar with. And sometimes this is a surprise when they're wanting to come in and purchase real estate. So I really wanted to highlight that requirement. So you're aware that for farm ownership only, this doesn't apply to operating, but for this unique or particular loan type to purchase real estate, that's a requirement. This program, the down payment farm ownership program, is specifically designed for beginning farmers and socially disadvantaged farmers and veteran farmers. With this program, the applicant will contribute a 5% down payment towards the purchase of the property, and then FSA will come in and finance 45% of the purchase price, or up to $300,150, whichever is less. The remaining 50% of the financing can be provided by another lender, that being a bank, a farm credit, or even an owner that or the seller that's providing owner financing. So this is unique to beginning farmers, socially disadvantaged farmers, or veteran farmers. So you may be wondering who makes up a socially disadvantaged farmer. Well, that's exclusive to certain groups. If you belong to the Asian ethnic group, Alaskan Native, Native American, Hawaiian, Pacific Islander, African American, or even as a woman, you would fall into that group. And so if you do, you could utilize this program. One thing you'll notice that the interest rate is a lot significantly less the direct financing. As of April this month, it's 1.75%. Now for the lender or whoever the other financing makes up, they're capped at 20 years, and so the same for the direct side as well. As far as the socially disadvantaged farmer, that information is self-certified on the FSA 2001 in the general information section. There's an ethnic section where you can identify if you belong to any of those groups. So for joint financing, it's kind of similar to down payment, but a little bit difference there. As you notice, the term on the down payment was capped at 20 years. This is at 40 years, and this is open to anyone. It's not geared towards any specific group. You could receive up to 50% financing from FSA and the remainder from a commercial lender. It gives, the benefit of providing the low interest rates on the direct side, while still, you know, getting some support from the commercial. So you're almost somewhat towards graduation, but not quite. FSA share can be financed for up to 40 years, unlike the down payment program. And one thing about joint financing for the direct and just in general, any FO, is we don't have any down payment requirements. Um, if you're applying for a FO outside of the down payment program, there's no down payment required.
Hey, Calvin, we do have a question, and
Yeah,
it
sure.
says, can you use that loan to construct building on the farm?
Yes. And it really depends on what we're constructing. If we're talking something that's going to improve the farm or be used for the farm, for example, a barn to store hay, you know, um, even a farm residence in some inst
It
and it
says a
says
building. Okay, yeah, you see it.
a building to grow mushrooms. If we're talking like a greenhouse or something of that nature to produce hydroponics, then yes. In general terms, yes.
And you have one more question.
Okay.
Regarding inability to obtain commercial loans, would I be required to apply for multiple commercial loans and be denied first? Or is that there some metric or test FSA would use to determine whether I would not qualify for commercial lending?
Yeah, I mean, you could do that prior to, I'm not saying you have to, prior to submitting the application and have that documentation in hand that you've been denied. I'm not saying you're required to. One of the things that our loan officials should be trained to do is when we receive that application and we're reviewing it and reviewing all the financial information you provided, if we feel that you might have the ability to get financing at a commercial lender, we could shop that and see if a commercial lender is interested and would do it. And in that instance, we may, say that you could get commercial credit, but we should be trained to identify who's strong enough to get commercial credit if you haven't already pursued it on your own.
The other comment on that, and Calvin gave a really good answer, but on these joint loans where we're talking about joint financing, a lot of times it can come with the bank will do the loan as long as FSA participates. So if you've got a real estate loan where they want to participate in one of those programs, it opens the door when the lender says, hey, we'll do it, but we want to participate with FSA. So he's right on with the letters of declination, but the other way to open that door is for a lender to say, yeah, we want to participate.
Okay, there's two more questions.
Okay.
One is I'm a veteran and woman farm owner. Is the joint loan the best one to construct the mushroom facility?
Well, it's really going to depend on several things. How much capital you need. Will it exceed what we can do on a direct end? Um, I wouldn't steer you one way without more information about what your specific farm operation needs. And, when you apply, that's something that, if you're not sure of, I would recommend maybe having those conversations with the local FSA office. As to Heather's point, we might have, lenders that we can not necessarily point you to, but if we feel like there might be joint financing necessary, um, we can steer you or at least guide you in that direction of what loan type would work best for your situation.
That I believe this question was asked during the down payment program as I was kind of
Okay,
watching the Q&A. And I
sure.
want to be sure to tell everyone that the down payment program is to finance the purchase of a family farm. Under that program, we don't have the construction freedom that we do under the other two farm ownership loan programs. So I just wanted to
Right.
make sure that we gave that clarification because I did see that come in when you were talking about that. So I wanted to make sure we had that in there.
Good deal. And sorry if I hadn't seen them all pop up on the questions. And
I've been
uh,
watching.
yeah, thank you for that. And I will
And the
say
only
some.
other,
Oh, go ahead.
go ahead, sorry. The only other question was, um, which loan were you speaking of for building on the farm? Example, refrigeration or solar?
That would be the farm ownership. Um, Specifically. And to Heather's point, she was showing the difference between the down payment, the joint financing FO, or just a regular direct FO. A farm ownership loan can be used to um, perform real estate improvements or finance real estate improvements. And like I said earlier, the dependency on which one should be utilized can vary depending on the how much is needed as far as the dollar amount.
The one caution with solar, I see that you have solar on there. As long as it's solar for the farming operation, one of the things that's becoming more popular is solar farms. And that may not be applicable to you guys, but solar farms are not allowed to be financed with FSA funding. I know that's become a lot more popular in the years, but the last year or so. But if you are putting solar on your farm to support your farm, then yes, that is an eligible purpose.
I
All
don't see
right.
any more questions at this point,
All
so I
right.
feel like you can
No,
go on.
no, all good questions. And some of these too, keep these questions in the back of your mind. We may cover some of them in the future slides, so keep them coming. All right, let's talk a little bit about microloans. Microloans are more simplified loan program, and when we're talking about the dollar amount, they're capped at 50,000. Um, the difference between these and some of our standard loan programs is that there's reduced paperwork. That being where we require 3 years of financial production history and financial history. Only 1 year is needed. As far as the terms, those are still the same as our operating and farm owners. Well, for farm ownership, it's a little different at 25 years, but for the operating, it still can range from 1 to 7 years. And so the cap on those is 50,000. And so these can be used also for the same purposes that our standard farm ownership and operating loans can be used for. And so this program is a good tool for someone that's just trying to enter in, never, had any experience with FSA and may not need as much as far as the dollar amount, a large amount, and just to build that, excuse me, build that experience with credit and financial management before moving into some of the larger dollar amounts that our programs have to offer. Emergency loans, these are used to help producers recover from physical or production losses caused by a natural disaster. These funds can be used to restore or replace any property that's been damaged, for example, a tornado or a hurricane or some other natural disaster that has occurred, a flood. Excuse me, they can also be used to cover production costs for a disaster year, including inputs needed to restart operations. They are capped at $500,000. That's the maximum you could receive. And just to continue on, to qualify for an emergency loan, there has to be a secretarial or presidential disaster designation in the county that that producer operates in, or it could be a contiguous county. And that producer must have suffered at least 30% loss in production or a substantial loss in livestock products, real estate, or chattel, personal property. And then, just like some of our other general eligibility requirements for our other loan programs, they have to be unable to obtain commercial credit as one of the requirements. I want to note on this is that an application for emergency loans has to be submitted no later than 8 months after that disaster was declared in that county or contiguous county. And I know this webinar didn't focus a lot on guarantees, but I didn't want to leave it out and covering that a little bit. As we stated at the beginning, these loans are provided by commercial lenders, and FSA can guarantee up to 95%. It's either typically a 90% or 95% guarantee. A producer applicant will apply directly with the lender that's participating in our program. And so this, like I said earlier, helps the lender reduce the risk and gives lenders the confidence to support a wider range of producer needs. The maximum guarantee limit amount is 2,343,000. All right, so let's switch gears here and talk a little bit about completing the FSA application. And as you can see on the screen, this is the first page of the FSA 2001. Just to kind of give you a background, historically completing this form or the application process meant filling out several other separate forms at the same time, which was overwhelming for applicants, especially first-time borrowers. So about 3 years ago, we made significant enhancements to the FSA 2001 to consolidate some of those supplemental forms that were required and condensed it into the FSA 2001 that's available today. And so now this FSA 2001 form captures more information in a single document, which has made the process easier. And what I'm going to do is just highlight a couple of sections of the more pertinent sections of the 2001. The first being one of the most important components of any FSA application is basically clearly identifying the purpose of the loan. And so here in Part E, applicants must specify exactly what they need funding for. And so when we were talking earlier about on the slide, the different purposes and having that knowledge before you apply is extremely important in making the process a lot easier and seamless because you don't want to be applying for something that we can't even finance based on a regulation. And so this helps us determine the appropriate loan type and evaluate whether the requested assistance supports agricultural production. and along with that, the amounts that coincide with that request. One thing I want to note too is that you can apply in one application for two different loan types. So, for example, if you needed a farm ownership loan to purchase real estate, as well as an operating loan to pay for the annual operating expenses for, let's say, a row crop operation that grows cotton, then you can delineate that here in the different spaces provided. Uh, Another area of the application is Part F, which deals with the training, education, and experience. This is a major factor in determining the eligibility, especially when we were discussing the farm ownership loan, where applicants had to meet the past 3 out of 10 year rule. Here's where you can check the applicable areas that you've had experience in, whether that be an ag-related degree, employing, if you've been employed as a farm manager. There's several areas where you can address that. One thing or a couple of tips here that I wanted to point out is to be specific. If you need to describe what you did and for how long and what part you played in an operation. That's why that field number 2, where you can explain or elaborate more, is that space is available, and that helps loan officials kind of evaluate where you are as far as your farm experience. And you can include the scale of the operation and when relevant, such as the acres managed, the livestock numbers you managed, or the crops produced. So some of the supporting documentation that we can also look at as far as experiences, the tax records or production records on the tax return. If you've been farming, you're more than likely filing what's called a Schedule F, which shows how much revenue you've generated and the expenses you've incurred for that farm operation. So those additional documents can help strengthen your expertise or experience in farming. Are there any education type loans, workshops, conferences, or financial education? Um, Education loans, not necessarily. As far as workshops, I know, in addition to FSA events that we get invited to, whether that be extension and outreach that we perform, there are those opportunities, just such as like this webinar where we're explaining how you can participate or benefit from our farm loan programs. And, when we get into a demo later, I can show you another resource that will be helpful in getting educated about our farm loan programs. The next area I want to discuss is the importance of developing an accurate and complete balance sheet. This is one of the key financial documents in the application. Basically, what a balance sheet is a snapshot in time of everything you own, that being your assets, and everything you owe, your liabilities. Is one of the primary tools that we use at FSA to evaluate the strength and structure of a farm operation. Um, Now, if the applicant operates through an entity, the balance sheet must reflect both the personal assets and debts as well as the entity level assets and debts. But the important thing there is to keep those clearly separate so it helps us to avoid confusion during the review. As far as assets, what does that pertain to? Things like equipment, livestock, vehicles, crops, the cash on hand, the cash in your checking account. And within those, there's different categories: current assets, intermediate assets, and then long-term assets, which could also, example of a long-term asset would be real estate. Now, as far as liabilities, that would include existing loans, credit lines, accounts payable, um, and then any other outstanding debts. One tip here I want to emphasize is that, your financial records become important in helping you to complete this, such as bank statements, loan documents, tax returns, purchase invoices could go a long way in verifying valuation of your assets. Um, when you're talking about livestock and growing crop inventory and growing crops, resources such as university extension services and market reports can help establish a value, or even the local FSA offices. You can also come in and sit down with your loan official, and they can help you fill these out as well. Another financial document that's important in our assessment when we're reviewing the application is the cash flow projection. This part of the financial document includes all the income that'll be generated from the farm. So things like crop sales, livestock sales, custom hire work, or any other farm generated revenue. The main thing that you want to make sure you do when you complete this part is to use reliable production estimates. These are estimates, but you want to base them on reliable sources such as production history, university extension data, or NAS statistics. If a producer applicant has contracts, such as forward price grain or livestock contracts, that's a little bit easier to identify what price you're going to get for the commodity or ag product you're producing. So one thing that each state or within each state FSA has or should have is a price list that FSA can use and what we use internally to project the prices for the commodities being produced. Sometimes that price list might not entail what you're producing because there's unique crops and there might be a unique circumstance where we don't have that on the price list. But I would recommend, getting with your local FSA office to see if there is a price list. If you're not sure what the current price is of the commodity you're wanting to produce, especially if you're new to farming or trying to get into it. And so, at the end of the day, we want to conservatively project price estimates to ensure that we're being realistic in the revenue that you're going to generate on your farm. The other side of developing cash flow is expenses. So we want to make sure we're using accurate historical data. If you have actual production history, that'll go a long way in being helpful. Producers can also meet with local input suppliers such as seed and feed and fertilizer companies to get an accurate or close to accurate price projection on those expenses as well. One thing I'll say too, as far as family living expenses, those typically get understated. And so what's helpful in projecting those is, generate your monthly either credit card statements and seeing how much you're actually spending as far as family living expenses, things like your utilities and food and, just even your extracurricular activities. And so, um, also, what we want to account for in the cash flow is to account for debt repayment. So we'll factor into that and ask about any capital needs, any upcoming capital expenditures, such as equipment repairs or improvements that we should be aware of that you plan on um, incurring within the time frame of the loan repayment. And lastly, saving and investing goals. Maybe you have a standard or typical uh, frequent contribution towards saving and investment. And so that'd be also good to know as far as capital that's going to be allocated towards that purpose. Some of the additional items that we will need, I mentioned this earlier, is 3 years of financial history, with the exception of microloans, of course, and 3 years of production history. Um, this is where tax returns and cash flow reports and that type of historical financial documents come into play that will be essential in helping the application move along smoothly. We also verify non-farm income and debts. These additional income sources are factored into the cash flow, and so that could be verified either through payment stubs or tax returns if you get 1099 income. Um, and then likewise, any existing debts must be documented as well. So FSA has a clear financial picture of all the financial finance that are coming in and are also going out, expenses going out. The 80-10-26, this is a form that is an environmental form that ensures that producers meet conservation compliance before receiving loan benefits. And so that's just an additional form that's required for a complete application. Uh, One thing also that you should be mindful of when you're going to apply is that we are required to do environmental review on every loan application. Now, the extensiveness of that application, I mean, the environmental review will depend on what you're requesting and the action taking place. So, for example, any action involving ground disturbance, where like construction or land improvements, will typically require a more in-depth environmental review, where we'll have to consult with the state historical preservation officer or the tribal historical preservation officer, and in some instances, U.S. Fish and Wildlife Service, to ensure there's no historical artifacts out there on the property that's being disturbed. And so the reason why I want to highlight that too is that those consultations have a 30-day timeline, that gives the what we call the SHPO and the TIPO, that gives them time to respond to determine if there is an archaeological survey that needs to be done out on that property because they think that there's something historical or tribal on the property that you're going to operate your farm on. So just wanted you to be aware of that because that can add to as far as days to the process. Also, development plans when we're doing construction on a project, there's a development plan where we'll want to make sure we have an understanding of what are the phases of construction and outline what's being improved and when. Report fees are also required for the loan application. And as you can see, based on if you're applying as an individual, that's $16 is the credit report fee for individual, $24.50 for married couples applying together, and then $50 if you're entity applying. Leases may also be requested if you're operating on several different tracts of land and you have rental agreements. We may request copies of those lease agreements to verify access and control of the property. And then lastly, for entities, there may be additional documentation required so we can see how that entity is structured, such as a LLC or a partnership. We might request or will request organizational documents and details on the ownership percentages and the breakdown of the operational roles of the members. Okay, well, this is the part I really wanted to get to and excited about because I think it's going to be a great resource for those of you that are on the call. We over the past couple of years, we developed a loan assistance tool. And so this tool is educational, but it also gets you prepared for applying for a loan. And so I kind of wanted to take you through a demo, and we'll provide the link here so you can have access to it if you've never heard of it or want to play around and see. The good thing about this is it walks you through the process of the eligibility based on what you want to do and what you want to apply for. And so I just want to walk you through a demo here quickly, so you can see what that looks like. And so here you can see the first question it asks you is, are you legally competent to enter into a loan agreement? And I'll select yes here and then save and continue to move to the next part. Are you participating in the youth educational farm program? For the purpose of this demo, we're going to say no. Are you able to obtain financing elsewhere? And so I know this was a question that we received earlier. And so these bullet points kind of guide you along to determine if you might. And even if you still don't know, you could select yes and still have that conversation with the local FSA office to inquire about what you should do or how you can go about evaluating that, or they can help you arrive at that the right conclusion there. Whoa, what did I do? Oh, I should have select no. Sorry. Are you able to obtain finance elsewhere? We'll select no for this instance. So how can the Farm Services Agency assist your farm? And so what we'll say here for the purpose of this demo is that we needed financing to assist operating costs, so an annual operating loan. But we'll also say that we need financial assistance to buy a farm or expand a farm. I am planning to apply for a loan to operate my farm in amount of. So here you'll delineate whether you need a microloan or which would be $50,000 or less. If we'll say we'll need more than 50,000, so we'll say between 50,000 and 400,000. And then it asks, have you spent at least 3 of the last 10 years gaining farm experience? So it's asking this question because we said we needed assistance to purchase land. So if you can clearly identify you've been farming the last 3 years, I've been managing my cow calf, that's what we're going to assume and select yes here. I'm planning to apply for a loan to help finance buying or expanding my farm in amount of. So it's asking you this again because we're applying for 2 loans here. So we'll also say 50,000. This one, you can see the limit went up to 600,000 because that's what the farm ownership loan versus the last one that was inquiring about the operating loan that we selected. Do you operate as a nonprofit entity? We're going to say no. Do you provide a majority of the day-to-day labor and decisions for the farm operation? We'll say yes here. Do you fall under one of the following citizenship statuses? Yes. Have you had any drug conviction in the last 4 years? No. Have you ever been convicted of a federal crop insurance violation? We'll say no here. And just so you know, if you select yes, it will, provide you a prompt, but, we want to get to the end here, so I'm selecting these strategically. Does your credit history demonstrate on-time payments? We'll say yes here. Do you currently have any delinquent federal debts or unpaid federal judgments? No. Have you ever received debt forgiveness for the Farm Service Agency? We'll say no here, but just to point out, this kind of gives you an example or some bullet points on what that means and what that could potentially look like if you're not sure. Have you exceeded term limits with FSA direct loans? So one thing we didn't talk about in the presentation is that for farm ownership loans, if you have an existing farm ownership loan, you can't if it goes past 10 years of that existing farm ownership loan, you can't request a new farm ownership loan. Within that 10-year time frame, you have 10 years to request subsequent farm ownership loans. And for operating loans, you have 7 um, calendar years to receive direct operating loan assistance. And those aren't consecutive years. It's just when you receive it in that year, if I received a operating loan in 2026, I have 6 other separate years I could receive OL assistance in. So after you get through that, it walks you through those eligibility questions. It'll spit out a farm loan quiz results. And so this is great because it basically shows you, based on your responses, we think you're best suited for the specific type of loan. Now, I want to say, as we were going through those eligibility questions, by you doing this, it's not making an eligibility determination. It's just a way that you can potentially identify if you might or might not be eligible. So I say that to say, just by you taking this, I don't want to discourage anybody thinking that they're going to be determined ineligible. This is just a tool to coach you and make you ask questions about, okay, this may be an issue, this may be a hindrance before you submit or complete a whole application and submit it to FSA. So it identified that we were best suited for a farm ownership loan to purchase the real estate. And it explains a lot of the information we went over in the presentation, and the same for the operating loan. And then also it provides you with the process. So it talks about the steps along the way. Um, when FSA is notified, once you complete an application, the FSA loan official will notify you. If approved, it could take up to 30 days to get an appraisal done because we requested FO, a farm ownership loan. And once the appraisal is received, the title work is ordered and completed by the closing agent. So there's guidelines there to kind of give you an outline of the timeline. So this is a great tool to just at least have as a reference point of what to expect. Another great thing about this is that it provides you with the loan readiness checklist. And so I'm going to click on this so you can see. Hopefully it'll generate, right? Yeah. So based on the loan type that you need, there's columns and categories to tell you what documentation is necessary. And so this is just another added tool to ensure that you have what you need when you're applying for farm operating assistance. So I just wanted to highlight that. That's a part of the LAT or loan assistance tool. And then also you can access forms on here as well. So if I clicked on that, it'll generate this next page, and then you can go through and access the FSA 2001, the highly erodible AD 1026 form we talked about, along with several other forms. And some of these aren't necessarily required. They're just available for you as options. Let me see if it'll let me go back. Okay. And then lastly, I had mentioned this at the beginning, there's a option for you to have the ability to submit an application online. Sadly, sometimes, you might not have the best experience of going into the FSA office and dealing with your local Farm Service Agency staff. If that application process has become a pain point for you, you can also apply online and submit it that way as well. And so when you do that, we can track when this application was submitted. Several staff get notified that the application has been submitted. You do have to create an account to be able to submit these applications. And one thing I do want to note, at one point, this was limited to individuals only and married couples applying jointly. But here recently, they've opened this up for entities now to also apply using the OLA online application platform. And then lastly, you can download the quiz and print out your answers. You can also, if you think you selected something wrong, you can go back or retake the quiz. And just wanted to show you this tool because I think it's a great way to educate yourself. One thing I also wanted to point out is that lenders, this is a great tool for you to point applicants to or producers that come in and you may not know a lot about our programs. You can provide this as a way for them to um, get access to the resources and educate themselves. All right. One thing I also wanted to mention is that once an application is completed, FSA has 60 days to fully process it and issue a decision. Um, a complete application means all required forms, documents, and supporting information have been submitted. So after that's been determined, there's 60 days that our loan officials have to reach a final decision. Sometimes it can be earlier, but that's just what our mandated time frame is. And then there's also other elements that can extend that process, like if you're applying for real estate or applying to purchase real estate, you have to consider that there's timelines that can extend that, such as the appraisal. We allow 30 days after we approve a loan for a contracted appraiser to go out there and complete that appraisal. So at that point, you're looking at 90 days. And then after that appraisal comes back and is sufficient, uh, title work and orchestrating that can take a little extra time. And we've already touched on the environmental aspect as well. So lastly, I just want to say there's some other resources too that are available at your disposal. Farmers.gov is a good way to stay informed of all things FSA. and we covered the loan assistance tool briefly in the online application process. But I highly suggest too that you not be afraid to reach out to your local FSA staff, and also coordinate with local lenders. You know, it'd be good to know which lenders in your area may participate in our guaranteed loan program, because that may be something you want to take advantage of down the road. And so my biggest tip would just be to not be afraid to ask questions and to get as much information before you're submitting these applications to alleviate and eliminate some of the frustrations that we've seen in the past that a lot of people have encountered. And so, with that said, I'll open it up for more questions, but just also wanted to highlight the links to the loan assistance tool. And then if you're not aware of where to locate your service center, we can provide those in the chat as well.
I'm gonna promote everybody to have the ability to talk. So if they want to have a dialogue that way, they'll be able to do that.
Okay.
So just 1 second. Okay, at this point, I believe everybody has the ability to unmute themselves and talk. If you have a question, feel free to say it.
Yeah. But they're harder. They're less fun.
And at this point in time, I am going to stop the recording. So if that makes anybody more comfortable, feel free.